Imagine waking up, opening a quiet control panel on a glowing laptop, and realizing that a single piece of software is scanning $25 trillion in global wealth while you drink your morning coffee. You didn't build a bank, you didn't run for president, and you didn't buy up every house on your block. All you did was license an artificial intelligence risk network called Aladdin, the invisible central brain of the entire global financial system. Most people look at the stock market and see individual human traders shouting on trading floors buying tech stocks or panicking over inflation numbers. But when you zoom out to the multi-trillion-dollar level, you see something entirely different. A single, monolithic digital monopoly operating quietly in the background. It manages over 7% of every dollar, euro, yen, bond, and stock on planet Earth. Right now, inside more than 1,000 of the world's largest financial institutions, central banks, and sovereign wealth funds, decision makers are staring at the exact same software screen. They cannot trade without it. They cannot price risk without it. And if this one system suffers a technical glitch, the entire global banking architecture freezes in its tracks. Welcome to Aladdin, the most powerful piece of financial technology ever built. Aladdin stands for Asset, Liability, Debt, and Derivative Investment Network. It was created by BlackRock, the largest asset manager in human history. To understand how a single algorithm gained total dominance over the financial world, you have to rewind to 1986. A young Wall Street trader named Larry Fink made a catastrophic $100 million mistake at First Boston. He predicted interest rates would stay high, but when rates plunged, his mortgage portfolio collapsed. That single failure revealed a terrifying truth to Fink. Wall Street was trading billions of dollars in complete darkness. Traders were using basic spreadsheets to guess the future, unable to calculate multivariable global risks in real time. 2 years later, in 1988, Fink co-founded BlackRock with a single obsession: build a central intelligence system that calculates every possible risk before it happens. The early version of Aladdin started on a single Sun microsystem computer sitting under a desk. Today it runs across massive data center networks, housing thousands of high-performance servers, running millions of complex Monte Carlo simulations every single second. Here is how Aladdin actually works inside the global economy. Think of Aladdin as an all-seeing digital weather forecast for money. Standard investors look at simple metrics like last quarter's revenue or price-to-earnings ratios. Aladdin processes everything simultaneously. It ingests real-time shipping vessel tracking data, satellite imagery of retail parking lots, interest rate shifts from central banks, weather patterns in crop zones, geopolitical news sentiment, and historical market behavior going back decades. Every single second, Aladdin runs thousands of worst-case stress tests. It asks hypothetical questions. What happens to corporate bond values if a sudden hurricane destroys 3 major oil refineries in the Gulf of Mexico? What happens to European real estate if energy prices spike 40% overnight? What happens to pension funds if a major bank goes bankrupt? Before a human fund manager even sees a breaking news alert on their screen, Aladdin has already simulated 10,000 probable outcomes, calculated the exact percentage of portfolio loss, and recommended automated trades to neutralize the risk. This extreme risk prediction gave BlackRock an unfair competitive advantage. While other investment firms were wiped out during market panics, BlackRock's portfolios stood firm. Seeing this, Wall Street's biggest players realized they couldn't beat BlackRock's software, so they asked to rent it. BlackRock began licensing Aladdin to direct competitors, pension funds, corporate treasuries, and governments. Today, Aladdin doesn't just manage BlackRock's own $14 trillion in assets. It monitors an additional $11 trillion for external clients. The client list reads like a roster of global power. The California Public Employees Retirement System, major Japanese life insurance companies, sovereign wealth funds in the Middle East, massive European banks like Deutsche Bank, and even central institutions like the Bank of Israel. During the 2008 financial crash, when the United States government was desperately trying to analyze toxic mortgage-backed securities from failing giants like Bear Stearns and AIG, whom did they call? They hired BlackRock Solutions to use Aladdin to analyze and manage those hundreds of billions in troubled assets. The government literally hired BlackRock's computer system to bail out Wall Street. This creates the ultimate corporate moat. When you own a retail store, you have to source inventory, manage staff, and fight for customers every day. When you own Aladdin, you sit back and collect subscription fees approaching $2 billion a year from the very companies that compete against you. Clients rarely leave. Aladdin boasts an extraordinary 98% 3-year client retention rate. Once a multi-hundred billion dollar fund plugs its infrastructure into Aladdin, switching to a different software is like attempting a brain transplant while running a marathon. Now ask yourself the most important question. Why is this single platform so dangerous for the world? When thousands of independent financial institutions, pension managers, and hedge funds all use the exact same risk software, they stop thinking independently. If Aladdin's algorithm decides that a specific stock, bond market, or emerging country's currency is suddenly too risky, its automated risk alerts fire off across hundreds of separate banks at the exact same millisecond. Instead of thousands of individual human investors making different randomized decisions, everyone follows the exact same software recommendation. They all try to sell the exact same asset at the exact same moment. This creates a self-fulfilling prophecy, a phenomenon economists call algorithmic groupthink. If Aladdin predicts a market crash and triggers defensive selling, the simultaneous selling action of $25 trillion across the platform causes the exact crash it was trying to prevent. Furthermore, it concentrates unprecedented influence into a single firm. BlackRock isn't just an asset manager anymore. It is the infrastructure provider, the risk auditor, the major shareholder in almost every Fortune 500 company, and the government's primary financial advisor. If a traditional bank grows too large, regulators step in and label it too big to fail. But because Aladdin is categorized as a software platform rather than a traditional bank, it operated for decades with virtually zero federal oversight. In the modern world, true power isn't about owning physical gold vaults or army tanks. True power is holding the master key to the digital nerve center that decides where $25 trillion flows every morning. You don't need to control governments to rule the global economy. You just need to build the central algorithm that manages all their money.